Hi everyone, it's me, your manuishu, and welcome back to my YouTube channel manuishu Acca Classes. So in this video, I'm going to do further 5 questions from the Kaplan kit of F6. So if you are watching my video for the first time, don't forget to subscribe my channel and share it among your friends so that they could also have the benefit. And if you haven't watched out my previous video, you can find the link in the description box, or it will be reflected on the right hand side of your screen. So now in this question I will be doing question number 17. Oh no, sorry, it's 16. And the question is, we have to identify and tick the appropriate box for the following saving income, which one is taxable and which one is exempt. So there are few lists. It's not all about the saving income which are exempt. So it's all about overall income tax which will be exempt from the income tax. I will just list those names. Um, just a second. I'm checking my notes that I have been noted down. Mm, okay, yeah, fine. So first of all, here, interest from the national saving and investment certificate. It is exempt. Gaming, winning, betting, lottery, and premium bond winning. It is also exempt. Scholarship paid to taxpayer is exempt, while scholarship paid to the taxpayer family is not exempt. Be careful with this point. Another is income received from the ISA, so-called individual saving account, is exempt, and state benefit paid in terms of accident, sickness, disability, it is also considered to be exempt from the income tax, and interest payment on the repayment of the tax. So these all are the few points which I have been noted down in my notes, which are exempt. And so now we have to just tick the appropriate box which will be exempt and which will be not be exempt. The first one is National Saving and Investment Account Interest. The name I pronounced earlier was National Saving Certificate Interest, not account interest. So it will be taxable. Then Gilt Age Security Interest. I think this is exempt from CGT, not from the income tax. So it will be taxable. NSNI Savings Certificate Interest. It will be exempt. So it was in the list which I pronounced earlier, right? Okay. So next question is, we have to calculate total income tax liability for the tax year 23 and 24. Tax year is 23-24, right? And okay, so David has following income tax for tax year 2024: property income, interest from the UK government security gilts, dividend, right? So in this case, we know that income for the individual is categorized under the three head, that's non-saving, and then after it's a saving, and then dividend, right? So all the income is categorized under these three heads, and I think I had made a video on that, how to remember what will come under the dividend and on the other portion. Like I had made a shortcut like so-called tired app, right? TIREDAP. So your T stand for trading income, stand for interest income, R stand for rental, so-called property income, E for employment, D for dividend, A for allowance charge which will arise in case of excess contribution in the pension, and P is the pension income, right? But if you will study the ATX, there are four or more area that will be comes under this format. So one is the income from trust, so it will be fall under category T, and one is the income from rate, real investment state trust, I think its full form was rate. So it will be also come under these two categories. So this is the shortcut which I have been made to learn the what comes under the format of income tax, right? So what is the income given? Okay, so what are the income given? One is the property. It will comes under head non-saving 21150, right? And other is interest income, which will fall under saving head 2400, and other is dividend it's fall under the dividend 750. Okay, fine. So now total is one. We will make one separate column for the total, and here we will just pull down the respective amount of each income. Okay. Okay. So now we have to deduct the personal allowance, right? Personal allowance will be from the non-saving one. First, it will deduct it from the non-saving, then from the saving, then from dividend. And why so? Because non-saving is taxed at the higher rate as compared to the other two, right? So, one thing I would like to tell, if your saving income is covered by the nil rate band, in that case, you can directly transfer the personal allowance from non-saving to dividend. No need to set up against the saving, because already nil rate band will be consumed in their saving income. Taxable income will be, let me just add the keyboard. I'm facing difficulty with the typing. Okay. Okay. So taxable income, we will add this on. We will add this on as well, and deduct the personal allowance from the this as well. So this is our taxable income, right? So we will first calculate basic rate band, which is 37700, and it will be first consumed by non-saving. And amount is 8580 at the rate of 20%, right? Multiplying these two, we will get 716. Then saving income. In saving income, first we will think about the band. So we will see the taxable total income. The individual is basic rate taxpayer, right? So in that case, David will be entitled for the 1000 nil rate band. Okay, so 1000 nil rate band, saving nil rate band of 1000. It will tax at the 0%. Okay, then remaining amount will be covered by basic rate band, and the amount will be out of 24. We already account for 1000, so remaining is 1400. So 20%. Okay, 280. Then we have dividend. Okay, so for dividend, there is also nil rate band available, but it will be available irrespective of the individual position of taxpayer, like whether he is basic rate one or he is higher or additional. He or she will be entitled for the this 1000 nil rate band always. So, but only the David is having 750 income. So, okay. So total income tax liability is, will add this and this. So I got 1996. Okay, and option is A. Okay. Similarly, for the 18, we have to calculate income tax liability for tax year 2024, and only income the addition is having is dividend income. Fine. So it's also quite easy. Tax year is 23 and 24, and he is only having dividend income. So dividend. So dividend income is 56950. So we will deduct personal allowance first, and that's of 12,570. And we will arrive at taxable income. You might be start thinking why I'm not deducting the income from the non-saving, because we have no such information given in the question, right? So we will just move ahead and deduct it from the dividend one. And taxable is 44,380. So first we will account for the nil rate band, which is always available in case of the dividend, so 0%. Okay. And then basic rate band. Basic rate band, it's 37,700, right? So it will be taxed at 8.7%. If you don't remember the tax rate, don't worry, it will be provided to you in the exam. Okay. And so what is the amount left? That will be taxed with the higher rate band. So out of 44,380, we account for the 37,700 and 1,000. So remaining amount is 5680, which will be taxed at 33.75%. And multiplying these two, our total tax liability is total tax liability for Harrison, I think its name. We are having, it's 5216. Sorry. Made a mistake. This 1,000 band has been consumed by the near red band, so it will be 36700. Yes. Okay. It's now perfect. Okay. So moving ahead for question number 19. How much premium of 82,000 is taxable in the property income for the tax year 23 and 24? So let's move to the scenario. Since 6 April 2023, okay, Nicholas has laid out the unfurnished free holiday office building. It was unfurnished, okay. On that day, tenant paid Nicholas a premium of 82,000 for the grant of a 15-year lease. So in case of lease, first you have to identify the period for which lease has been granted. If it is more than 50,000, then whole amount will be considered in the CGT. If it is less than 50,000, in that case we have to make a CGT adjustment. And how do we do that? Just look what I'm doing right now, so you will be clear. So premium is 82,000, right? And we will make a CGT adjustment. We will just take the premium multiplied by n minus 1. Here n is number of period to which lease has been given. In our case, it is 15, and we will deduct minus 1, then multiplied by 2%. Okay, so now property income will be, they're only asking the property income, not a taxable income, so it will be 59040. Okay. So there is an alternative method to calculate this as well, and in that case you can do is just take the premium amount paid and deduct the 51 minus 15 and divide by 50. You will get the same answer, I guess. Yeah. Okay, so question number 20. Employer is an employment. Amber is in employment earning an annual salary of 55,000. Her only other income is bank interest 3,000. She receives a child benefit of 2075 during tax year 2024. Amber child benefit tax and the method of collection of 2024 by selecting the appropriate box in the table below. Okay. So basically, her salary means Amber. Amber's salary is 55,000, right? And she has also a interest income. Okay, interest income, and this one will be non-saving. This one will be saving. Interest income is 1,000, I guess 3,000. Sorry. Okay, 3,000. So basically, for calculating the child benefit tax charge, you have to know first what your adjusted net income is. And how do we get that adjusted net income? So first of all, we need to find out our total income. In our case, is 58,000. If there is any qualifying loan interest payment, we have to deduct it from the total income. In our case, there is no such qualifying loan interest payment, so we will not deduct. I mean, we'll just keep the zero. Qualifying interest payment, right? So its qualifying interest payment is zero. In our case, we will arrive at the net income. Okay, and from this net income we have to deduct the gross personal pension contribution. And then deduct any amount paid to UK charity, like donation amount, gross donation. In our case, nothing is available, so we will keep zero. You have to show zero as well in the exam, right? So we will arrive at the adjusted net income. Okay, and then limit. This is same as we are doing in the personal allowance deduction case, right? So this is the same, and but the limit is different. Here limit will be 50,000, and excess is 8,000. Now we will calculate the percentage and just divide by 1,000. So 80%. So child benefit charges equal to 80% into how much he have been contributed in the child benefit, 2075. So it means child benefit tax charge is 1660, and it will be assessed through your self assessment. Yes, not from the pay. Okay. So in this video we will do up to 20. For in next video we will move ahead.